Good morning, good afternoon, and welcome again to another ADM Agriculture YouTube market update. I'm joined again by my colleague Freddie Humfrey, and well, it's been another incredibly volatile time since our last video. And really, this has been highlighted in the market moves just in the last 48 hours. We saw a big rally on Monday, but prices were sharply lower again yesterday. And in fact, we saw a 45-cent intraday trading range in Chicago. Quite incredible yet again. The market really seems to be struggling to find any clear direction at the moment. We did get the first weekly update from the USDA on the corn assessment. It showed that things were actually looking marginally better than they were than the same time last year. Perhaps a small bearish surprise. But really, the next set of numbers that we'll focus on will be the USDA update on Friday. I think the market is expecting some small declines in US wheat production estimates, but probably an increase in global wheat ending stocks, but nothing major. That said, the USDA is quite capable of providing a surprise to the market. There are some thoughts, however, that the crop is improving a little bit for next season. Things have certainly got better in Western Europe, France in particular, where they've had some rain. Australia looks set to have another 30+ million ton wheat crop, 3 years in a row now for Australia, having a bumper crop. And Russia could also have a really big harvest, potentially as much as 85 million tons, giving them an exportable surplus that could be as much as 40 million. On that fact, Russia could have a lot of grain to export next year, but also potentially things could be moving on the Ukrainian front. And we did see reports that Russia and the Turkish government are in discussions around a grain export corridor from the Ukraine. Let's see how that pans out and what happens. Despite all this, though, I think the global grain balance sheet is still incredibly tight, and we are likely to see some pretty unusual trade flows as a result of this market dislocation. Domestically here in the UK, the wheat crop looks really, really well, and a crop in excess of 15.5 million tons and a surplus approaching 2 million is realistically on the cards. We have, as a UK shipper, moved closer to export parity in recent days, but we're not really cheap enough yet to find any significant demand. The seasonality data as well would suggest that June is a month where prices tend to decline versus the annual market mean, but it's difficult to be certain about anything in the grain trade at the moment. Freddie, as a technical analyst, I'm sure you'll tell me that all of this price information is there in the market to be seen. So how are you seeing things from a technical perspective?
I wish that was that easy, Jonathan. But yeah, some really interesting stuff. So I thought we'd just have another look at London North 22 daily wheat chart. We looked at it last week, but adding something slightly different in this week. So just looking for a bit of an Elliott wave pattern. So this is something that we consider quite a difficult pattern to spot. But as you can see in this last 3 months, got a really nice 3 impulse up move with 2 pullbacks, 1, 2, 3, 4, and 5. Then we've highlighted that penultimate day from the all-time contract high at 360. There's a nice exhaustion gap which really brought that bull run and that 5 impulse wave higher to an end. More recently, we've seen a really strong pullback on line A there in this longer term uptrend, followed by the market just rallying a little bit in the last couple of days, potentially be within that ABC pullback pattern in that bull wave. So I've put C on there with a few question marks, just to highlight the potential downside on this Elliott wave. 5 moves up and then ABC 3 moves down, and it's quite interesting because when we look at that A move from 360 down to 296, it actually ties in really neatly with a 320 start to line C, and that full culmination of 280, which when we cast our memory back to last week's video, that was that level of 280 was the start of bull rally number 5. So yeah, quite an interesting chart, something that doesn't often happen that clearly on London wheat, but I think it's quite clear to see there just that potential. So, and then just following on from Jonathan's point on volatility, we maintain ATR, the yellow graphic in the middle there, so average true range. The current for the daily is £10.43. So we continue to see an increasing ATR, so increasing daily volatility, and that's actually at an all-season high, despite the volatility we saw when Russia preliminarily invaded Ukraine back on February 24th. So yeah, a very interesting market. Elliott Wave gives us a target of 280 again potentially, so the same as the start of Rally 5. All 9 lines point to a 280 from a technical in the short medium term.
Interesting, and that ties in with the seasonality as well. But
Exactly.
I think there is so much volatility and uncertainty at the moment in this market. It's really difficult to make any sort of definitive calls. Thank you again for tuning in. I hope you found this video useful. Again, as always, at the end of the video are our contact details. If you want to have any more conversations, please feel free to reach out to us. Freddie, thanks again for the input. Thank you for your time.
No problem. Thanks, John.
Bye-bye.